My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends, just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Maybe we should all just move to China, for heaven's sake. I mean, that way at least we'd understand so much more about what's driving the U.S. stock market, including today, where the Dow inched up 33 points, S&P advanced 0.15%, NASDAQ dipped 0.03%. See, a major Chinese real estate developer with a humongous debt load, $305 billion, might be going under. It could cause our whole entire economy, even in this country, to slow. The Chinese Air Force keeps making threatening flyovers in Taiwan's airspace. What is that? Well, it means, what does it mean for the supply of our most important semiconductors? They're made by Taiwan Semi. Apple's new iPhones arrive. Will they sell just as badly in China as Nike's shoes did? And last night, the Chinese government outlawed cryptocurrency, threatening to go after anyone who trades in Bitcoin or any of these other things. Now, these are all different kinds of threats. We were worried about what might happen to the global economy if the Chinese Communist Party decided not to bail out the millions of people that are owed money by Evergrande, especially its customers who bought unfinished apartments. But it looks like the government will help out the little guy in a kind of an FDIC style, a program like that for those who didn't do anything wrong, even as they'll most likely punish the rich executives who drove Evergrande to the brink of disaster. This company's so big that it could damage the global economy. Can you believe that? It can actually knock down commodity prices. It has started to do so. The White House held a meeting yesterday with tech titans to talk about the chip shortage, and the sotto voce undertone was how China really wants Taiwan, which could be a major problem for our semiconductor industry, including a military problem. We can accept all of these threats, all but the crypto threat. The defenders of cryptocurrency, the myriad defenders, they're everywhere, endlessly told us not to worry about the Chinese crackdown. Some even went so far as to say, and I heard this with my own ears, and I thought that maybe I should get some Q-tips. Some went so far to say is it's good for Bitcoin, which is kind of like saying you just lost your best player, but it's good. Christian McCaffrey went down. Wow, the Panthers are even better. No. Wasn't crypto supposed to be free from government interference? Easy to say, hard to do. Now, I've been worried about China's authoritarian government for a while, far earlier than most people, definitely more vociferously. I don't think many Americans understand the People's Republic of China is not like a liberal democracy. It has no interest in being a liberal democracy. It's a dictatorship run by the party, the Communist Party. The government has spent 40 years being business-friendly in order to attract foreign investment. But now China's wealthy enough that the regime can do whatever it wants. It doesn't even need foreign investment. And that's very bad news for crypto, despite what you'll hear from the true believers. The Chinese government is outlawing cryptocurrency because they want to know who has money and who doesn't. They want to know who's rich and who's poor. They're not cracking down on crypto out of nowhere. It's part of a broader crackdown on the rich as the regime goes back to its communist roots. They're not trying to regulate the kind of thing that we're doing, whether it's something that might be the Wild West. No, they're trying to find out who's rich. The Chinese Communist Party thrives on knowing all the data about their citizens. They'll tell you that. Crypto, by definition, is secret. Now, the Chinese Communist Party, they don't want secret. So they're making the banks disclose everything. Rather than trying to regulate the crypto economy, which is probably impossible, they're regulating the behavior of people who might participate in it. I expect a bunch of arrests, maybe some disappearances for those who persist in trading Bitcoin. Maybe the users can keep using, but the risk-reward changed dramatically. Oh, I own a lot of Ethereum. So those of you who think I am a crypto hater, that's wrong. I just know when the fortunes have changed. I'm not a fool. I see it. It's not good. The cryptocurrencies are worth less today than they were the day before. Which brings me to the game plan for next week. On Monday, we should get word about what will happen to the part of the Evergrande edifice that hasn't been bailed out. I think the government will make sure the big shareholders do get wiped out, and that includes management. Remember, if the executives are lucky, they will only get re-educated, all right? Remember, there have been years where they execute 4,000 or 5,000 white-collar criminals a year in China. So let's not think that these guys are necessarily going to get a couple of tutorials. But Beijing has changed a great deal in recent months, and every luxury industry that sells into China is now under assault. I fully expect to learn of the regime's new enemies when we return to work Monday morning. Every day we come in, there's a new enemy because they don't like conspicuous wealth. Next up, we spend a lot of time talking about the semiconductor industry, but we don't care enough about differentiating between various types of chips because they're all linked by the ETFs. However, the basic chips for so many devices are made by Micron, which reports on Tuesday, okay? Now, get this. Today, the long knives were really out for these guys. 3 different firms warned of looming disappointment. I have to admit that those predictions were particularly daunting. Felt like before FedEx, remember that disaster? My view, why don't we just wait and see how Micron does? Just remember that high-end semiconductor plays have little to do with Micron, so they might be worth buying if this quarter drags down the whole industry. And what am I thinking about there? Well, of course, that's NVIDIA and AMD. Tuesday morning, we hear from Thor Industries, the RV motorhome maker. You know, we spent a lot of time on this. They've been making a ton of money since the pandemic got rolling because it's the safest way to take a vacation. While I like Thor, you know that, I also wouldn't be a buyer here because we're at the wrong stage of the business cycle. It's too discretionary. And as the Delta variant fades away, the stock market will say that people are going to travel normally again. In other words, even if Thor blows away the numbers, I think there'll be a lot of analysts who just say, well, that was the last good quarter. Wednesday gives us a great look into small and medium-sized businesses when we get results from Cintas, that's the gigantic uniform company, and Miller Knoll, and that's the office chair maker formerly known as Herman Miller, Aeron chairs. Both companies have been uneven lately, but I think they'll tell positive stories. Once they are parsed, they might provide us with a more positive backdrop. I like them both. Next up, we recently visited the brand new Bed Bath & Beyond in Midtown Manhattan. Now, I was blown away by how beautiful, but also how technologically advanced this store was. Bed Bath's quarter might not be a barn burner, but I think the redesigned stores will change people's impression of this formerly fossilized institution. I like the prices. I like the merchandise. I like the management. I think the stock can go higher, particularly if it gets hit. Remember, what we saw is going to get rolled out. So if the stock gets hit, you're buying a stock that does not take into account the new stores. As long as there's a chip shortage, the used car market will remain strong. That means CarMax should deliver a great number on Thursday. But let's not be too particular. I like AutoNation. I like Lithia. I like Carvana. If you're inclined, you got my blessing to buy CarMax ahead of the quarter. I like AutoNation, too. One that's totally bothersome to me, though, in terms of buying ahead is Paychex, the stock, not the company. This payroll processor is incredibly well run and consistent, yet it never gets the respect it deserves. Why? Because it's hostage to the labor market and to short-term interest rates. The stock tends to sell off even after good results. Buying Paychex into that weakness has been a great strategy. Check the chart. You'll know I'm right. If you're convinced that the economy's slowing, you might want to buy some McCormick, the spice maker. The problem, of course, is that while it sure seems to be getting stronger, well, they might lose business as the Delta variant peaks. We don't know if it's going to or not. And people feel more comfortable going out to dinner again. I'd avoid it for the moment, even though I like it. Finally, on Friday, we tend to look back, as we did all week today, and we see how COVID did. It was the second week that actually things were a little bit better. We've had a couple weeks where things seem to have calmed down, and we may be nearing a bizarre herd, and that's H-E-R-D, immunity, where everyone has either gotten vaccinated or gotten sick because Delta's so catchable. I think the infection numbers will continue to improve. The bottom line, get ready. After next week, the onslaught of earnings and the Labor Department's all-important non-farm payroll number will strike. After a crazy up and down, or some people say down and up week, we're now headed into a calm before the storm moment here. And that storm could get a lot worse depending on what happens in China, where there's no calm to be found at all. Carol in New York. Carol.
Hi, Jim.
Hi, Carol.
Booyah to ya.
Booyah.
This is Carol from Syracuse, New York, home of the Orange and the awesome Brianna Stewart.
Yes, that's right. That's right, and a good air conditioning company. So what's going on?
Well, I wanted to ask about ISRG. A few weeks ago, there was something in a write-up where Mark Rubash sold $1.2 million of dollars in shares, and Marion Corrette sold $4.6 million, brought the stock down about $40,000, and I was wondering what's going on. Is
all right,
anything wrong?
Let me answer this one. There are people sell for many different reasons, and we don't know, and that obviously is a disturbing pattern. The stock is down. I know this. Intuitive Surgical is one of the great stocks of our time. I've been recommending it literally for 900 points, and I am not backing away one bit. The machines work. It's a great company. Can we go to Pervez in New Jersey, please? Pervez.
Hi, Jim. Booyah.
Booyah.
To you. I am really so thankful to you that you took my call. And I'm a new investor, and I'm a nervous investor, I should say, because I just started recently. And on September 24th, I bought Bank of America shares at 41.25, and then it just fell so much. But I held on to those stocks. I want to know from you if this is a time for me to hold the stock, or should I sell it, or should I buy more stock?
Okay, look, Professor, I've got to look. Bank of America is a very high-quality company. Interest rates are going higher, tends to do well in that environment. I think you're fine. Is it my favorite in the group? I actually happen to like Wells Fargo more. But Bank of America is a very, very good bank, and if rates go up, it's the most levered to higher rates. You're fine, and thank you for confiding that you are young and working, because I love that. Bob in Texas. Bob.
Hello, Jim. Thanks for taking my call. I'm on the hunt for a green October to profit from the U.S.-Australia nuclear sub-tech deal. It's a loud ping I hear on my sonar, General Dynamics, or something else.
There was a really good piece this week that Goldman Sachs did about General Dynamics, and it made me really want to buy it. But it wasn't for that. It was for the business jet business. And I got to tell you, I think they're doing a lot of things right. I really wanted to buy it after I read the report. I say stay with it. You're going to do well. All right, look, next week, I think it remembers the calm before the storm, because earnings are coming up. But get ready, because after that, the onslaught of earnings, the Labor Department, non-farm payroll department are coming. This is like your last time. If you're on vacation, you can probably... There was nobody in town today. It's really weird, but I guess that's COVID. On Mad Money tonight, as pressure to compete with Amazon's pharmacy business mounts, I'm sitting down with the CEO of GoodRx to find out how it plans to keep its devoted following, including me, by answering your most pressing health questions. Then it's been a wild week for the averages. Does your portfolio have what it takes to keep up with the unknowns? I'll be the judge of that when we play at My Diversified. And before she was the best housing analyst in the street, Ivy Zellman worked full-time as an executive assistant, taking night classes to put herself through college. I'm talking about her path and one of the great success stories of our time on Wall Street and what she sees in the housing market going forward. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.